Hello and welcome to this week's episode for the Stock Market Update brought to you by Conservative ETF Investor. Today is Sunday, September 10th, 2017. We have made some significant changes here this week for Conservative ETF Investor. We've changed around our portfolio. We're going to go over that right now. Here we are at our home page. Once I get done with this video, I'll upload the link right here so you can click on it. Scrolling down on our home page, you can see our current recommendations. We have just changed our current recommendations to a smaller portfolio of funds just to make it a little more simplistic in our approach. So we are now holding a total of 5 items or 5 different asset classes. The first asset class is U.S. equities, which is the Standard & Poor's 500, the S&P 500. The ETF symbol is SPY, a 40% portfolio allocation for that. The next one down is going to be the All World excluding the United States. Symbol is VEU, which is brought to you by Vanguard, with a 10% portfolio holding for VEU. Next is to have real estate exposure, and also brought to you by Vanguard. Symbol is VNQ. This is a REIT, which is a real estate investment trust. We have a 15% portfolio allocation for that. Next is an income fund, which is brought to you, let's see, that one's Osterwise income. I think it's paying 4.79% dividend annually right now. And the symbol is OSTIX. It has a very low duration of, let's see, let me go over to my portfolio ideas in case I forget that duration. Let's see, Osterwise income is a 25% allocation, currently paying 4.79% annual yield monthly with a 1.48% year duration. That is a very low duration in a rising interest rate environment. So your risk exposure to bonds is a low risk exposure, paying you 4.79% annually. So your risk to reward ratio for this 25% allocation is extremely conservative. And we also put in cash in there of 10%. And one of the reasons why we want that extra 10% cushion right now is because here in September of 2017, we have not had a greater than 10% correction since February of 2016. And the risk right now is extremely elevated. The market usually gets 10% correction at least once a year. So, and we're in currently we're in the bearish phase of the cycle. There's a 6-month period. They say sell in May and go away, and then you're supposed to buy after October 1st, and then be in the market and be long for the bullish period, the bullish 6 months of the year. Here is a way to add new money if you're bringing in new money, a very conservative approach, and you can go over that. Coming down here under our Portfolio Ideas tab, I've also got a trading strategy here, which goes into a little bit of that. This is a little bit more for traders and not investors, but if you want to read about that, and here's just a chart showing you some different ETFs and what their symbols are, and if you wanted to go with leverage, what that leverage is. And this is the minus is if you wanted to go bearish or go short on those. This is all highly risky stuff, for more advanced traders. If you're a beginner or anything of that nature, you don't even want to go in this realm right here. You just want to stick with the simple 1x portfolio, which is non-leveraged, just the simple ETF. That's it. Okay, so that is where we are at. Let's see here. Now let's go over each of our holdings. Now, compared to the previous portfolio just prior to this one, pretty much everything on SPY, VEU, and VNQ, all of that and the buy recommendation transaction dates all remain the same. This is a new one, which is OSTIX. So I just brought in the buy on just this past Friday, 9/8/17. And the price is the current price right now, current closing price of $11.44. Okay, we're going to now show you how well this portfolio would have fared since inception and for calendar year 2017. Okay, so since inception, the portfolio would have done 10.48%, not including dividends. And let's see what our dividends would be. Our dividends would be 1.4%. So you would add 1.4% to 10.48 in order to get your total portfolio value. As a comparison, if you were in the S&P 500 only, you would get 16.87% plus the dividend of the SPY. So you would be definitely doing better if you were strictly in the SPY portfolio. But this portfolio that we have here has got SPY, all world excluding United States, real estate, plus a 25% income fund, plus 10% in money market. And this one we're just using a Vanguard money market, so your money just stays flat. So from a risk standpoint, this is a very, you don't get as much reward, but you're also taking much less risk with this portfolio. So since inception, 10.48%. Now for calendar year 2017, this is a conservative ETF investor portfolio for calendar year 2017, has gone up 6.82%, not including this year's dividends. As a comparison to the S&P 500, the S&P 500 is up 10.05%. So here you see we're just about 7%, so we're about 3% behind the S&P 500 for calendar year 2017 with much less risk in our portfolio. Okay, so now that we've gone through all of that, let's jump into our charts. Because it's a simplified portfolio, we have much less charts to show you now. We're going to start with the S&P 500. So for our charting, we use stockcharts.com. I use the weekly charts. Let me get rid of that inspect mode right there. So here we are right there. You can see the word weekly, so it's a weekly chart. I use weekly candlesticks. And let me just scroll over here so you can see the thumbnail, which is right here. Each one of these bars represents 1 week of action, and then the color tells you what's happening with that week's action. So if it's this clear bar, you know that we opened the week here. During the week, we came all the way down, touched that blue, came back up, and then closed the week here. Went up a little bit higher, but then ended up closing right there. All right. And for the following week, it's a red bar, so it closed lower. So this one closed lower than last week. So it's opened up here and it closed down here. Okay. And then on the, let's see here. All right. So anyways, there's your bars right there. Now, for the S&P 500, we did have a negative week. We lost 0.51% for the week. What else can we see here? We are in a rising upward trend channel. We came down, kissed the bottom of the trend channel, bounced off up it, and here you can see we've come up above that point right there. So you can see it here in the thumbnail really well. We use 2 momentum indicators. We use the MACD, moving average convergence divergence at default settings, and we use the bottom one here as slow stochastics at default settings. Now, on the MACD, you can see that we are below the signal line, which is a bearish activity, and it is since lost momentum and traveling flat, and it's just turning down slightly, almost parallel with the signal line. On the slow stochastics, which is a faster moving average, you can see that we've hit a bottom. We've come up, crossed above the signal line, and getting ready to travel above 80. So the fact that it's above its signal line is bullish. The fact that it's below 80 is somewhat bearish. So This is almost a neutral signal right here. But because the actual ETF has shown strength or a support line right in this point right here, bounced off up it, it appears as if we are going to start traveling north again towards this upper channel trend line here. So that's the interpretation that I get right now. So I expect either sideways movement or upward movement, but not really downward movement at this time in SPY. That is my expectation. Now let's move on to the next chart, which is VEU. VEU, which is your Vanguard All World Excluding United States ETF, symbol VEU. This is again weekly chart, 5-year time horizon on the chart. Now, let's see here, move over so you can see the thumbnail. Almost a similar pattern as the SPY. You can see that we had an upward trading wedge pattern here, and this was so bullish it broke out above it, and it broke out above this declining tops trend line. Then this line here acted as support, which once was resistance, now acts as support. We broke out above it, moved sideways, bounced off up it, and then kind of hit a ceiling here of a new, creating a new upward resistance line, came down, and now it's got a support line. So now it appears to be traveling inside of this rising trend channel right now. You can see that it hits that support and bounces up off of it. And so it's looking actually pretty strong. For our momentum indicators, you can see that the MACD is kind of trucking along, moving almost parallel, bouncing off the signal line, and then going up. And the MACD, excuse me, the slow stochastics is staying pretty much above that 80 line right there. All very bullish action. We had a positive week, gaining 0.56% for the week. Okay, let's move down to the next one, which is VNQ. This particular one, which is our real estate holding, has been pretty strong. You can see that we were trading in this trend channel between here and here, and then it kind of tightened up a little bit. Right now, it is right at the upper end of this trading channel. If, as this ETF has been hitting that resistance line and coming down, hitting that resistance line, coming down, hitting the resistance line, coming down. We are up against that resistance line again. We may break through it. Let's see how our momentum indicators are faring. As far as the MACD goes, you can see all that turmoil here, how it's been just, bouncing back and forth for quite some time. Same thing with the slow stochastics. But right now, you can see that on the slow stochastics, we are above its signal line, and we just broke above 80. The technical number is, let's see what that is, 83.13. So from a slow stochastics momentum indicator, it's showing bullish. This, and also on the MACD, we are above the signal line and traveling up. These are bullish activities indicating that it may now have enough momentum to break above this resistance line. Once that happens, and if we could possibly get a retest of that resistance line and then hold that resistance line and then go back up, it would appear that their next area of resistance then this line would act as a support line. Then we would come all the way up to here before we would hit the next resistance line. Well, that is a pretty good gain if we can do that, because that would take us up approximately 4% above our current level. So that would be a very nice action to get an additional 4% on our VNQ real estate position. Currently paying 4.34% annual yield. Okay, and I think we have a dividend getting ready to come up too. Okay, so that is VNQ. Next one down. The next one down is our income portion of the portfolio. This is the OSTIX symbol, Osterwise Strategic Income. And it had a flat weekly chart, 5-year time horizon. We have two moving averages in here, the 17 and the 43 exponential moving average, and you can see we have just been clearly above that since sometime in 2016. Just completely bullish action for 2 years now, or just about. It's just very, very strong, paying 4.79%. The MACD is traveling down on a nice slow and steady path because this is just staying in a nice consistent upward pattern, and the MACD loses its strength when the ETF or the stock or the index or whatever it is that you're following travels in this type of a pattern. Now in the slow stochastics, you can see that we've been above 80 now since we got a very clear bullish breakout signal right there. And it has just been strong ever since and just staying strong. So that is our 25% allocation for the income portfolio. We have two more charts to go over. Let's see here. The first one we're going to do is we're going to show you the VIX. Now the VIX is for the S&P 500, and this here is now daily. We've moved on from weekly to daily charts, and we use a 1-year time horizon, and this kind of tells us how strong the S&P 500 is. Now, when the blue line is below the red line, which is our moving averages, we have a 50-day EMA and a 200-day EMA. When the 50 is below the 200, that is a bullish action for the S&P 500 because this VIX indicator, volatility index, is an inverse indicator. So in other words, when this indicator is going down here we have SPY chart. This is the S&P 500. The S&P 500 goes up. So, and when the S&P 500 goes up, this again goes down. When the S&P 500 goes down, as it did right here, okay, you can see that, and you follow this line up, you can see that the VIX jumps up. So when you see the VIX jumping up, that means that the S&P 500 is traveling down. Right now we are at what, 12.12. You can see that right there. This line is kind of hiding it, but you can see it right here. So it's somewhat neutral. So this is looking good for the S&P 500. It doesn't look like our volatility is at any type of an extreme level. Now there's one more volatility indicator I want to show you, and that is the volatility index VXN, and this is for the NASDAQ 100, just to give us an idea what the NASDAQ 100 is doing. Now the NASDAQ 100, the blue is above the red, meaning that the 50 is above the 200, which is more bearish than bullish. The indicator is traveling above the 50 and the 200, which also is going towards the bearish indicator. The slope of the 50-day is positive over the last 3 months, again bearish. So for the NASDAQ 100, it would appear as if the risks are elevated as compared to the S&P 500. You can see here on the MACD that it's coming down from negative territory, getting ready to cross above the 0 line and getting ready to break above its signal line. Well, when that happens, that puts a lot of pressure on the NASDAQ 100. Here we have symbol QQQ chart at the bottom, and you can see that when the MACD is traveling up, it puts a lot of sideways to negative action on QQQ. It makes it difficult for it to advance. Here here you can see that you had a pretty good advance on the MACD from here to here, and during that time frame the NASDAQ lost momentum and went down from here to here. So that is going to wrap up this week's charts. Again, this is brought to you by Conservative ETF Investor. I hope you have enjoyed the stock market update this week. My name is Ken. I am your host, and I'm signing off now. See you next time.